Grade 12s, let's have an overview of the cash flow statement. I've got an example here where I would like you to look at it as a whole, even though I will be breaking it down into 3 parts or sections. And then also just to note up front, I'm not going to be discussing any of the notes. I just want you to understand the face for now. So first of all, before I start with this, I actually need to ask the question, what is the purpose of the cash flow statement? Well, let's go back to the statements that we have already. We've got an income statement or statement of comprehensive income that we've been doing since grade 10. And at the bottom, we have a net profit after tax. Now, this gives us a very good indication of how much money the company is making. But let me ask you a question that refers to the cash flow statement. Is this the actual cash that we are receiving? And the answer is no. If you look in your income statement, there's accounts like depreciation that has got no cash involved in there. It's calculations to depreciate your assets, but at the end of the day, no cash went out of your business, even though it's recorded as an expense. And there'll be some other expenses as well that falls under the same category. If we look at the other financial statement that you have, what is going on in this one? This particular statement basically shows you the health of the business. Where do we stand? So at the top, we've got our assets, and then we equal it to our owner's equity plus our liabilities. So as the name says, statement of financial position, we are taking a snapshot for this company on the 31st of October and looking at where the business is standing. How healthy is the business? So again, the question comes up, does this tell us exactly how much cash is in the business? Well, yes. If you go to this one, cash and cash equivalents, you've got an amount there that can tell you how much money is in your bank account. But we have to break it down a lot more to understand how cash is generated. And therefore, we bring in this cash flow statement. We want to see how's the cash flowing into the business and how's it flowing out of the business. So this is basically a summary of your cash transactions. It gives us some information about the risk. So you would see if your cash is really low, you can't run your business without consistent cash running in and out. And then you also identify the ability of the company to generate profits in the future. So it's intended to explain in a way which the cash resources of the company has changed in the past year. So if you look just at the amounts that we've got here, some of them are positive and some of them are in brackets. And the main question you'll ask yourself is, did this make the cash go up or down? And if it's a positive, it means the cash went up. And if it's a negative, it means the cash decreased. So let's briefly look at the 3 different parts of it. This is just an example. It can look different from business to business. If I go to the part 1 section, which is operating activities, we are looking at the main source of, or rather the main purpose of the business. And this is where we look, especially this first line, as my stock that goes up and down. I look at my debtors, I look at my creditors, how my cash is flowing in and out. And then they also mention that we specifically look at interest, dividends, and tax. These expenses are listed separately. These 2, dividends and tax, is added normally and shown in your balance sheet. Therefore, they've added here to operations because it's part of running the operations of the business. Then we go to cash flow from investing activities. Investing activities for this particular business, they purchase some fixed assets. So for example, they bought another car or land and building. And in this instance, that cost them money. So there'll be a minus 2 million. Proceeds of the sale. This means you have sold a non-current asset. This would probably be land and buildings you could have sold, or a vehicle again. And in this instance, you made some money. Do know that this relates to the actual cash that you made. Then increase in the investment. This is if you go and you decide you're going to put down some money in a fixed deposit and therefore your cash will go down. Do note, if this investment matures and you're getting the money back, then that will be a positive. So your question is, what is happening to my cash? Then I go to the third and final, the green section. I will look at this yellow one at the bottom. It's the easiest part, but it's not a specific activity that I refer to. This one is for financing. Now you can think of your debt equity ratio. You ask yourself how much of the money comes from the owners and how much money is coming from external financial institutions. So that would be like a loan. So first of all, there's some money coming in from additional shares that was issued. So you had 520,000 increase. But at the same time, the company repurchased some of the shares, and that means our cash did go down. So even though it's beneficial for the company to probably do this, at the end of the day, it did cost us some money. And then finally, regarding your loan, if you are borrowing it, you are gaining cash. If you are actually paying it back, then this will be in a bracket because your cash will be going down. So what you've done is, there's 3 blocks here. For each section, you add plus minus whatever the bracket says, and the answer sits on top of the block. And the name is right next to the actual answer. So you're left with 3 amounts. For operating, day to day, you've got 1.1 million. Just going to abbreviate them. Then for your investing, there's actually a good decrease because of the asset that you bought. So that's 2 million going down. And then finally, your financing, because of this loan that you got, went up. So you take those 3 amounts and you add them plus or minus them, and you get your answer, 19,000 Rand. What is this? This is the change in my cash. Part of the purpose of this statement is to see how much did my cash change. So that's a positive. Basically went up with 19. So you don't want that number to be too big, because you want to be using your cash to make you more money, like buying an asset that generates more profits. Then we go to the next line, which is the easy one. This is the beginning balance of your cash and cash equivalents, which you'll find in your balance sheet from the previous year, 51. And then finally, what is your cash sitting on now? It's going to be 70, because you take the 19 plus the 51. So this last part is very easy to just calculate what is the actual cash. The main focus is on the activities that generated or decreased your cash.